Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. And usually we start with the highest probability scenario and work our way to the lower probability scenarios. But in this video that is turned around. We're going to start with the lowest probability, build up to the higher probability scenarios, because I have to explain something in the lowest probability scenario at the moment in order for you to help you understand why the probabilities for the scenarios here are higher. So let's then start with the first one, the WXY sideways double combo, where we're looking for a flat in wave Y, A, B, C, a three-wave structure where the common target for B is up here, the 1.236 to the 1.38, taken from the high to the low of wave A with the Fibonacci tool, 73.5k to 74.6k. It is the common target for a B because an expanding flat is the most common flat pattern, and the target for B in an expanding flat is this target over here. An uncommon flat pattern is a regular flat, A, B, C, more of a ranging structure where the target for wave B is this target over here, and the target for wave C is below the low of wave A. And then we have a rare flat pattern, which is a running flat, where we have a wave A, B, and then a wave C, where wave C does not take the low of wave A. But as mentioned, that is a rare structure, therefore never gets the highest probabilities unless all of the other scenarios fail, but at the moment they haven't failed just yet. And the reason I talk about a running flat as well is because if we go to the lower time frames, 15-minute over here, and we look at this move to the downside, then for a wave C, if B is already in over here and finished, and we are looking for a wave C to the downside, we are looking for an impulsive structure to the downside. And in this case, we then have a few 1-2s, but the lowest degree Elliott wave count is this one over here, where we have our wave 1, our wave 2, and then a 3, 4, 5. You're looking for at least one more low below wave 3 on lower volume, because by far most commonly, wave 3 has the highest amount of volume, which is the case over here, as you can see. So therefore, we would expect a wave 4 and a wave 5 on lower volume. However, if this is already a finished wave 3, it is very unlikely that with a couple of 4-5s, you're going to reach the lows over here. And as just mentioned, with the WXY scenario, the rarest pattern is a running flat where you don't take the low of A. Most common is A, B, haven't reached the B target yet, and then a wave C, take the low, regular flat, A, B, C, take the low, running flat, not take the low. But if wave 3 is already finished, it is very unlikely price is going to take this low, because you would need extended wave 5s to reach the low of A in an impulse, 1, 2, 3, 1 and 3, quite similar in length. Then you have a 4 and an extended fifth, but an extended fifth is also a rare structure, and therefore we cannot expect wave 5 to be an extended impulsive structure. So therefore, what we are looking for the probabilities of a WXY scenario to increase and wave C to move below wave A is that we want to see another low, but we want to see a new low, preferably on increased volume, so that we can possibly count this as another 1, 2, and then look for a much bigger wave 3 to the downside, which is then going to get us closer to the low of this wave A, because that is the low that we actually want to hit in this particular scenario. If we make another low on lower volume, we cannot do the same, and therefore it's going to be very difficult to reach these lows over here. Then we have to think about a running flat A, B, C, but as explained, a running flat very rare, never preferred unless all of the other stuff fails. Now, if we look at the current range here, right, and we would label it as a wave 4, the invalidation for wave 4 is the 0.618 taken from the high to the low of this wave 3 here, which is currently sitting at about 69.9k. And so far, this range is still okay in time compared to wave 2. The vertical lines are fib times taken from the low to the high of 2, put on the low of this wave 3 here. And what you want to look for is this wave 4 to not be longer than preferably the 5 fib time, sitting at about 7 p.m. today, Central European time. So currently we're still ranging before the 4 fib time, so that is okay. But if we want to see a bigger move to the downside on increased volume, we preferably count this as another 1, 2. And if I then pull the wave 2 5 times on the chart, then you can see that the 4 is red. So preferably we're actually not reaching the 4/5 time, which is 2 p.m. Central European time today, and that would lower the probabilities to count this as another 1, 2 for a much bigger wave 3 on increased volume to the downside. And that then also has an effect on the probabilities for this whole structure. So at the moment, because of the impulse to the downside, the probabilities for this scenario are severely reduced. So therefore, we have to look for other structures. Now, the second lower probability, or at least a little bit higher probability, one could say, is a triangle here compared to the WXY, A, B, C, D, E. D has to be here because we then count this as a WXY structure. And the WXY structure in a triangle usually is only in wave C and wave D. 4 out of 5 waves have to be simple zigzag structures in A, B, C. And if there is a complex structure like a double zigzag, WXY, by far most common that is in a wave C or D, but in this case that would be your wave D. And you're looking for a zigzag to the downside in wave E, but that then means that we need a 5-wave impulsive structure to the downside. So take the low, but for a triangle, we can take the low on lower volume because we are then looking for a 5-3-5-wave structure. We don't necessarily have to take these lows. It's not a flat, it's just a zigzag. So we can count a few 1-2s, get a 3, 4, 5, 4, 5, couple of 4, 5s, retrace, then move to the downside for E and eventually continue. The invalidation for this scenario is price moving below wave C, and what really impacts the probabilities for this scenario is this wave A. This wave A is simply incredibly short. It's pretty much one candle, and then look at the proportion compared to your B, C, D, and then also even your wave E, right? Your wave A is so short, it really reduces the probabilities for this scenario. By far most common is that you have your wave A, B, C, D, E, where actually each wave in a triangle becomes shorter in time and price, where wave A is usually one of the longer waves. But this is one candle versus, look at this. So the proportions aren't great for this particular scenario, and that is why it's the numbers 2 that I show in this video as we increase in probability. So then we have the two scenarios now coming up that have equal probabilities, right? Where we have the flat or the bullish scenario. Now in a flat, we are looking for an A, B, C structure to eventually take the low of wave A. Again, preferred expanding flat is most common. Wave B common target area is up here. This is your regular flat target area. Less preferred, uncommon, so therefore preferably we are still looking for upside in this wave B. The fibs are taken from the high to the low of A. Common target area is 76.9k to 78.8k. Inside wave B, we are then looking for a W, X and a Y structure. And in wave Y, we are then looking for this target area which has overlap with wave B. So that's quite nice, 75.5k, 78.1k. And inside wave Y, we are looking for an ABC, a 5-3-5 structure to the upside to reach the target area of Y as well as the target area of wave B. You can see there's nice overlap here between the different target areas. That is preferred. That's what we like to see. That also means that this wave B shouldn't be too deep, because if wave B is going to move towards the downside, the golden pocket is no problem. But the moment we move to the 786, then you can see that the common target area for a wave C here is going to be below your wave B target area. So that's something to keep in mind. It's also, it's not an invalidation. It's still actually a common target, but the 886 would be very deep for a wave B. So in this scenario, we are preferably looking for another move to the upside to reach the common target area for an expanding flat, as an expanding flat is by far most common. Now then we have the bullish scenario, and the first structure over here to the upside in this bullish scenario is counted the same in an ABC to the upside for the flat, ABC, because this is a 5-3-5, wave A, 5-wave structure is counted the same as what I have on the chart over here, which is an expanding diagonal. It's not pretty, but that's the only way to count it due to the overlap that we have over here. An expanding diagonal also is very rare low probabilities unless all of the other things start to fail. And that is the case at the moment with what I explained at the beginning of this video. So it opens the door for this scenario as well, where we then have a 5-wave impulsive structure to the upside in a wave 1, and we're looking for corrective structures to the downside in a wave 2, where your common target area for wave 2 is the 0.5 to the 0.786 Fibonacci, which is between 68.6k and 66.6k, and the very rare target for wave 2 is the 886 at 65.4k. Common target for a wave 2 is the golden pocket, as well as for a wave 4, and for the wave 3 and the wave 5 a common target is the 1.618. so this works indeed. We have hit the 105 at the moment, and we're going to observe what happens locally, as of course in this scenario you're also looking for continuation to the upside. And if price then takes the 74k high at a certain moment, that is when we have to observe the reaction, because we still have that potential flat scenario as well as continuation to the upside in a wave 3. In both of these scenarios, we are either looking for an A, B, C in the bearish scenario and a rejection, or a 1, 2 and a wave 3. So we really have to observe the potential move towards the upside and look for proof of resistance and weakness in price to then support a potential move towards the downside. Now, if we then finally look at the volume profile, beautiful range, rejection at the value area high, also lost this support resistance area. Now we're at the next support resistance area here, the white box, 68.5k to 69k. Below price we have this point of control at 67.2k, value area low at 64.9k, but we also have some additional support areas below price at the moment. As you can see, the blue box here, 67.8k to 68k, another one 66.7k to 66.9k, and above price we have this blue box here, 71.6k, 72k. Do keep in mind this little order block can also react as a bit of resistance. The 886 is also interesting. This 886 is taken from the high to the low as well as the golden pocket, and it's actually very common after an 886 touch to go towards the golden pocket, and that is where we are right now. Now the 886 increases probabilities to take this high sooner or later, as this is a very rare target for a wave 2, common for a wave B or a wave X, so any move to the downside has a higher probability of being part of a bigger corrective structure, and that therefore increases probabilities to take the high sooner or later. If we then look at the CVD divergences locally, it's a little bit of a mix. We have both bullish CVD divergences as well as the bearish one. The bearish target would be this low and the bullish target would be this high, which we haven't reached just yet. So I'm going to be patient and just wait for price to show us the way. So if we then look at the probabilities of the different scenarios, then this is good to know. A little bit of confluence between the different scenarios, right? So for a flat structure, we are looking for price to take the all-time high 74k before this low. In a bullish scenario for a 1-2 and continuation, you're also looking for this high to be taken before this low. For the WXY scenario, you're looking for the high to be taken before this low, potentially at a later stage, and for the triangle you're also looking for the high to be taken before this low. So that helps from an Elliott Wave perspective with certain positions and trade management. Now the probabilities at the moment are highest for the flat scenario and the bullish scenario, where we are looking for at least a 3-wave structure like this or potential continuation, depends on the reaction we get once we take the high as well. On number 2 we have the triangle scenario, but we need at least one more low over here, preferably without invalidating a wave 4, meaning hitting the 0.618 or range here for way too long, right? And then on number 3 we have the WXY, but as we know, a running flat is a rare flat structure, never preferred unless all of the other stuff fail. So preferably, if we want to reach a bigger wave C, or at least reach the low with a bigger wave C, we want to see another low, and preferably on increased volume, to extend the wave 3 to the downside and increase a little bit of probability for this particular scenario. So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.